Hello and welcome to The Law of Money with me, Vivek Law. Joining me is Anuj Puri, chairman of Anuj, and one of India's best known real estate minds, to answer questions that many of you have sent in around investing in real estate. Anuj, thanks like always for coming by again on The Law of Money. The first series we did with you got a huge response, so thank you. We're starting the next series now with you. The first question, many people invest in real estate because they believe that even if I'm not staying in it, at least I'm going to get a good rent. And maybe there were times when probably the rental yields were very high. I wanted to understand from you, does that logic still hold? Because we've seen a fair amount of tightening of this market in the last few years. And is that a prudent way of investing? That I just want to buy another property because I'm going to get a rent?
So first of all, Vivek, thank you for having me again. It's a very interesting question, Vivek, is that whether you should actually buy property for purpose of rental and whether that is going to, in the long run, help you as an investor to do that. So you have to divide it into two parts. One is on the commercial and one is on the residential. On the commercial, Vivek, it is making sense because your yields are between 8 to 9%. And hopefully there will be some capital appreciation. Today there isn't, but hopefully there will be, say, 2 or 3% every year. So you're then coming up to 10 or 11% in terms of the commercial. By commercial I mean offices, really rental yields. So 8 to 9% today you get, even if you're not to take into account capital appreciation. In residential, the yields are very, very low. So the yields are really depending on city to city. In the tier 1 cities, so the major tier 1 cities, it's about 1.5 to 2%.
That's it?
That's it.
1.5 to 2%.
That's what the rental yield is. So a lot of people ask me, Anuj, I bought this property of 1 crore. What should be the rental? I'm telling you on Vivek Law's show, it is that easy to calculate. That it's 1.5 to 2%. So that means 1.5 to 2 lakhs per annum is what the rent you're going to get it. Which means really that 15,000 rupees at the most, maybe 12 to 15,000 is what you're going to get every month on a property worth 1 crore. But there are 2-3 things that help in residential property. One, at this moment in time, the capital values are really low. I am hoping and I am believing the way that this market has gone, there's going to be a huge amount of shortfall in the supply going forward. With RERA coming in, with so many other regulations including GST, the debt that the developers are currently in, the supply has dwindled over the last 6 quarters. And I think the supply will continue to go down. Demand still continues to remain strong. In 2 or 3 years, you will start to see that the demand will really surge ahead of the supply and the capital values will go up. So any investor who's buying it will need to think on the residential a little mid to long term. The reason is that today the rental yields are 1.5 to 2%, but tomorrow you're going to start to see the capital values go up, say in sort of 2.5 to 3 years, capital values start to go up. At that time, your yields will go up to 4 to 5% with hopefully 3 or 4% of capital appreciation every year. And hence your office and residential total return, which includes your rental yields and it includes the capital appreciation, should about come at 10%. So that is what, a little long answer, but I just wanted to make sure people understood. Commercial, 8-9% today. Residential, 1.5-2% today. But hopefully going forward with the capital appreciation happening, the yields will start to go up 4 or 5% and then thereafter capital appreciation.